live. So now I am live. So today's an economics day, but we can certainly talk football or anything else. I thought I would just explain kind of what's going on and get into other stuff. So let's see, what's gold doing today? So let's check stocks and gold, and although we both know what's going to happen. So the Dow today is down 94 points. How it got back to 32,000 is all bullshit. It is 1646. So look at the manipulation that goes on. Look what happened at 10 o'clock. And this happens at 10 o'clock every day, as well as in the gold stocks itself. This is the same bullshit. This is thing that is derivative driven, not real prices. So keep that in mind. Silver really won't move. Diesel fuel. Fuel in 25 days. No, the U.S. isn't going to run out of diesel fuel in 25 days. So again, the media tries to. So they tell you here they're not going to run out. So they give you this bullshit. We're running out of diesel fuel, which means the trucks won't run because all the trucks who ship everything run on diesel fuel. So some more bullshit. This is all media thing. This is why it's really hard to trust the media. And that's why I don't trust half the guys on YouTube. I go right to the source of who I can trust. Anyway, so in the economics world, so our friend Nick says that there might be tornadoes in Oklahoma, Texas, Kansas, and that area, but I haven't seen it. I did a weather search and I said weather for Kansas, Oklahoma, Texas in the foreseeable week on Saturday, and I don't see anything. So I don't know where he's getting it from or if it's still on. So just be careful if you're betting games there. If it is a tornado and it's very windy, I'd be surprised if they didn't cancel the games. But if they do play the games, they should be under games. But it's not windy. So you'll go to the line, and if the line's moving up or stable, you're fine. If you see the line drop 5 points, then, that happened to me 4 or 5 years ago. I was betting games in North Carolina, South Carolina, high-scoring teams, and the hurricane came there. I'm like laying 60 points, and it's a 10-3 game because it was played in a windstorm, rainstorm. So be careful with that. All right, so let's talk some economics. Anybody have a question, comment, please let me know. I don't really know where to go, so I'll start with medium of exchange again. I know I've done that, but I want to hammer that point home. What is the medium of exchange? It's what people want. It's people will take this because I can pay you for that and people will accept it. You put it in your pocket. So everybody's happy. Here's $100. Here's $10. People will accept it. People will price it in dollars. So this is the acceptable medium of exchange. So what is it? It's got to be portable. A little bit does a lot of work. And that's why I argue about Bitcoin. It's got to be scarce to keep the value. But if you print it and have a lot of printing, then you lose value, which is what's happening now. It's got to be divisible for small exchanges. Well, you can get $1 or you can get $100. It's got to be fungible. Everything is the same. Well, these are all dollars, a 1, a 5, a 10, a 20, but it's all $1. It's got to be replaceable, which it is. It's got to be accepted by everybody, which is not Bitcoin's case. Gold and silver would be accepted by everybody. The Mickey Mantle card will not be accepted by everybody. That's why it's not money. It's a collectible, as is a Rolex watch or a Picasso. Everybody would want one, but it's not necessarily something you pay with. And then it's got to be durable, which means gold's indestructible. This is pretty durable, but it can get ripped or burnt, but that's okay. So that's why you work for the medium of exchange, so you can buy. So if I pay you in tomatoes, what are you going to do with it? But if I pay you in money, you can go pay rent and food and everything else. Like today, I paid rent. I use the money to pay the rent. I take the money and then I invest the money. It's really what's going it. So that drives everything. And that's what I feel the governments try to take advantage of and say, well, he's rich and he's poor. Well, why do people get rich and poor? Well, it's a division of labor. What you do is something that is, the object is to do something with a high skill level, right? Bobby's a baseball player. Not everybody can do it. That's why they get paid a lot. Or any athlete or singer or actor. That's why Brad Pitt makes a lot of money, because I can't be Brad Pitt. Most people can't be. There's only a few Brad Pitts. He makes a lot of money. The regular guys on the movies who nobody knows, they don't get paid as much because they're replaceable. So that's why you get the slogan like Saks Fifth Avenue, there is no substitute. It's the gold standard, because they're trying to differentiate themselves from reality competition. So the competition is what's good for us, because it makes the quality better and the price cheaper, as I've said. And it's okay if I repeat. So that's what you're really looking at, is people to be monopolies. So I'm trying to be a monopoly. I want to be the best camper. I want to teach you Austrian economics. I'm good with finance and economics and on computers. And so I bring to the table a skill set for a company to hire me of finance, a master's degree, and Austrian economics, as well as my ability to analyze and forecast, which is very, very rare what I do. Believe me, the way I pick games, there's not more than 10 people in the world who can pick like me, because I'm very unique at it. I get good feels about it, but I can give you the examples and the explanations on why we're picking this game. And good luck finding people that can explain their picks. I was listening to BetMGM, and when I get in the car, I turn on the sports, and I'm listening, and it's like these guys they're just, play how many yards this guy did and that guy, and they all have 25 bets, but they don't explain their bets, nor do they actually do the bets, right? Show me your ticket. Tell me how you bet it. And then this BetMGM, well, if you lose, we'll give you $100 in credits, which means you got to bet it anyway. You can't get the money. So in other words, they're saying, if you bet $100 on a game and lose, we'll give you credit for the 100. But that doesn't mean you'll get the money. That means now you can bet another game. And we know the odds on you winning are so slim that we're going to get that 100 back. It's a sucker play. It's terrible what they're doing. They're taking advantage and misleading people. And I really hate the misleading. And that's really the problem. All the misleading that people do, and then people don't know any better. And that's what we talk about here a lot. I mean, in football, but also like gold and the stock market and investments and everything else. People don't really know. So as I said, so we back up just a minute. So based on your skill sets, there's people with a lot of money and people with with a little bit of money. And so what the socialists try to do is divide. They go, well, the rich should pay their fair share. Well, what did the rich guy do? LeBron James, he gets paid because he plays basketball. Brad Pitt gets paid because he's a movie actor. Why should he pay his fair? What does his fair share mean? First of all, these guys shouldn't pay taxes. Nobody should pay income taxes because it's not income. I go do finance work or economics work. Okay, why should I do it? Well, you're going to pay me. Oh, okay. But based on my skill level, this is what I'm expecting to get paid. So why should I get punished and pay more taxes because I got a master's? I mean, that doesn't make sense. And that's really the problem with it, right? So they try to punish people. Well, why is the guy poor? Well, one, it's a skill set. There's people at work. I used to work at a grocery store, and then I got my degree, and then I don't work at a grocery store anymore, but I made $10 an hour there. Well, am I poor? Well, it depends what I did with my money. So what most people miss is when you make money, you got to budget it. So if I make $100, I can't spend 110, right? I can only spend 90. So you got to how do I make more money? I develop my skill. And the more skill I develop, the more money I make. And the more rare I am, the more money I make. And the more rare things I can do, the more money I make. Anybody can go work at a grocery store and pack bags and stock shelves. You're not going to get paid a lot. But how many people can understand economics and finance and teach it? Not a lot. How many can pick football games at this level? Not a lot. So therefore you make more money. That's why I don't charge $10 for my games, because I'm actually going to win, and I'm not being a salesman. I'm being an analyst, and I give you my picks here, and then I prove it, and then you see what happens, and then you go, oh, okay, yeah, he knows what he's doing. So that's why, and I'm not outrageous with it. I think I'm a normal price because I'm giving you a lot of games. Plus, you can ask me, right? Go try to ask these other, idiots on BetMGM. Go, how are you going to get a hold of them saying, well, why did you like Kentucky over Louisville? I mean, they can't give you the answer. So that's all Austrian economics. Austrian economics is based on skill level and division of labor. So division of labor is like a team. You got a quarterback, you got a fullback, you got receivers, you got linemen, and then you got defense. So divisional labor is you work on being a quarterback, you work on being a blocker, you work on being a linebacker. That's a divisional labor. And then you pick, okay, I need a linebacker. Okay, boom. And then you do that. So you do that in everything. Baseball, you do it at a job. I need an accountant. I need a guy. I need somebody for payables to pay the bills and receive the money. I need people for shipping and receiving and da-da-da-da-da. So you need the vision of bring different skills in, but they're paid differently depending on how easy it is. So your goal is to get the highest skill set you can get that pays you the most money. Now, what you have to do is you see me be adaptable picking football games, right? All of a sudden, there's a quarterback change. And this guy's really good. And I adjust to it. Like Kansas this year. Kansas was never any good. All of a sudden, they're good. We bet them over, and we win every week. Except for the Iowa State game, we took them, and Iowa State was favored, and we won with them. And instead of going over, but we adjust. And the key in economics is you need to adjust. So if you were a horse and buggy driver, or that was your business, and here came the car, you have to adapt. You have to get out of it and go into the car business. And same thing with computers. Computers come up, but Windows 98 guy is obsolete now because it's 2022. So you have to keep up with the times. And so there's certain programs that nobody can do. There's one called Signavia, which is like a swim lane. It would be in football. If this team has no injuries, then you make the pick. If they do have injuries, you go back and look for a team without injuries. And so there's these rules and conditions that are applied on these swim lanes. So after you go past check 1, you go to check 2. And then if everything's good, you go check 3, and then and then you're done. And if you don't pass check 1 and 2, you go back to square one to get it. Maybe it's a signature that needs to be approved. Maybe something didn't get entered in the system. Maybe the vendor's no good. I mean, there's a lot of reasons, but you keep going back. And then once you satisfy everything, then you go down. And that's what that program is. But if you can do that program, you can make $150,000. It's not a hard program. I wasn't the admin, but I did it where I was working, and it was very easy if you can think like that. Well, what do we need to do to get to each point? And that's how I think. That's why I'm successful at football and economics, because what's going on? Why is this happening? Why is that happening? That's very critical. But if you can think like that, you become much scarcer and make much more money, because you're not just saying yes, yes, yes. You're analyzing, and that's the key to analyzing, is to think and figure out what's going on. So if you can do that, now that'll give you a lot of money. So then there's rich people and there's poor people. It's all based on skill set, and that's all it is, right? LeBron James makes a lot of money because not a lot of people can do what he does. The guy at the grocery store, everybody can do it, so he doesn't make it. Or a busboy, I pick up the dishes, wash the dishes, the waitresses. If you're nice, they'll give you a tip. If you're not nice, you probably shouldn't be in that business. So then you get into that crap of people making different amounts of money, but that's based on the skill set. But most people don't understand that. And then they get jealous. Why does he make, why is he making all this money and I can't? Well, because you don't have the skill set. But people don't understand that. So those are things that aren't taught, that need to be taught right away. I'd say by junior high school, for sure by high school, by 10th grade. And that's never taught, right? I didn't take any classes in that till I got on my master's program. But that's what a division of labor is. And that's really critical to economics for everything. Even Mercedes versus Ford versus GM. It's division, and then it becomes competition. And that's where Ford and GM have problems. They can't compete with Mercedes or Audi or other companies. They're not competitive. And they're just not trained to be competitive. They just don't know what they're doing. So we go in the market and we set the price and we go, well, we'll buy it or we won't buy it. And that's what takes you to the stock market, going, this is a better company. They charge more, but they make more sales, and they're smart enough to make good profits. That's the company I want to invest in. And that's why. So you make money, and then what do you do with it? Now you gotta, okay. So the key is, I said, so let's say you make it, let's make it realistic. So you make $1,000 a week. And so you make $4,000 in a month. And you got rent, and you got your car payment and insurances and gas and food and utilities, and you go to the pool and things like that. And so what the goal is, if you make $1,000 a week, let's do 500 a week. So that's $2,000. You could only spend $2,000 a month, right? So rent, food, utilities, going to the pool, your car payment, your car insurance. And the idea is not to spend more than $2,000. The idea is to spend maybe $1,500 if possible. And then you got $500, and that now is your investment money. And then what do you do with the 500? And that's really the key to life, right? If you go and you spend more than your 2,000, you're fucked, because you got to pay that back. You don't have the money to spend. Why are you spending it? Now, the government of Keynesian economics, I'm Austrian economics, that's what I'm teaching you, is they say, you know what, we don't, our budget's $1 million a month, and we're going to spend $2 million. Well, how can you spend more than you got? Well, just print more money. And this is what's happening now, is they're creating that. They're spending more than they make. And that's printing the money, and that's the inflation, because you shouldn't be spending more than you make. So let's go back to us. So you got a $2,000 budget. Now, back in the day, your rent would be $300-$400. Back in the 70s and 80s, it would be $300-$400. You'd spend $1,000, you'd have $1,000 to invest. Now you were going to make more than 500 a week normally. Let's say you're up to 800 a week. But anyway, let's just use 2,000. Let's say your expenses are 1,500. So you try to keep track of that. You try to say, I can only spend 1,500. Now it's tough because you want this coat at the store, or it's we want to go to a vacation. We want to go to Hawaii. We want to go to Europe. I want this leather coat. I want this. I want to bet on football. I want to buy gold and silver. I want to invest the money. You have all these options. What do you do with it? So that's where it's never taught to you. That is the problem of what's going on now. People are not being taught any of this. And it really bothers me because this is the key to life. This is what makes you slaves. You're a slave if you spend 2,100 and you make 2,000 and you owe the 100, and then fuckers go ahead and raise interest rates on you. So you were paying 2 or 3% on that $100 that you're overspending. That is on the credit side, right? But they raise interest rate. Now it costs you more. Well, how am I going to pay it back? But instead of $100, you owe $5,000. But now the interest rate went from 3% to 10%. I can't afford that, and I don't make enough to save more. And then, so you're doing, that's basically what's happened, right? They interest rates. People can't get a raise. Oh, now I want, instead of 2,000 a month, 3,000 a month. Well, I can't get 3. I don't have the skill set for it. So maybe I go and try to get a better skill set if I can. Not everybody can be a pro golfer or a pro baseball player or a basketball player where you can make it. IT, you can probably get into IT taking classes online that aren't very expensive, but it's hard to just learn it. I find that the only way to learn is to do it. Like if you want to learn how to play poker, you gotta not necessarily play for money, but you gotta deal a bunch of hands out, right? I did that. I dealt 1,000 hands, 7-handed, just me, and you flip the cards face up, playing hold'em, and then you look at the cards, you throw the flop, you throw the turn, you throw the river, and you see what wins. And then you got to understand betting strategy, and then you got to go live. And if I tell you that I played when I was 12, 13 years old, but then I didn't play hold'em, right? And then when I went to play hold'em downtown about 4 or 5 years ago, I couldn't do it. I couldn't protect my hand. I couldn't make a big bet, right? I just wanted to throw in $5. I was playing 1-2, and I brought, I don't know, 100, $200. And there was times somebody would bet 15 and I'd fold or I'd call. And I was losing because I had 2 pair, but I wouldn't bet. And then the guy catches a straight or a flush. Hey, Greg or John. So this is economics. You got any questions or comments or things you want to learn, please ask. This is kind of an open forum, but I am explaining it in various ways. I'm very creative. What Austrian economics is, and what we do with it. So I'm up to skill set. So the only way to really play poker is to you've got to play, but you've got to play it live at the casino, not online. And you've got to understand the betting, and you can't be afraid. You can't be afraid to bet $5 or to see a $15 bet. So I'd flop like a aces or 2 pair, and I'd bet my $5, $10, and it wasn't getting the guy out, and the guy's hitting straights on me, and the guy's hitting 2 pairs on me and flushes on me, because I don't know at the time. I'm new to hold'em. I played in 6th grade. I'm playing 7-card stud, high low, and spit, and 727, and all these card games that were there. 7-card stud, 5-card stud, 5-card Cincinnati Kid. I'm playing all those because that's what was around. Texas Hold'em is a whole different animal that was never around then. At least nobody knew of it until now. So Texas Hold'em is a game of protection. I got aces. I got to bet $25, $30 in a 1-2 game to get people out, right? Because I want to get people out. I don't want them to draw out on me, because I can see what happens. If I don't bet, they're going to draw out on me, and I'm not going to win anything. But it takes you time, and you have to play to do it. So my point is, if you're going to learn how to do computers or finance or something that's going to increase your skill set, maybe a doctor, x-ray technician, a nurse, you need to learn it, and then you need to do it, and then you get your skill set. So the key is to look for jobs or look for skills that are paid more. That's how you get ahead. And you're not a mean person or a bad person because you make $200,000 a year. You're just smart enough to realize, if I become a doctor, well, if you can, or a lawyer or an IT guy, let's keep it to IT. Most people can do that. So I'm a Microsoft expert or an Excel expert, and I can make $100,000 a year. Okay, I worked hard at it. I did everything in Excel. I have Excel, and then I was able to figure it out. Then I get paid for it. Okay, what did I do wrong? Nothing. I saw where the niche is. I became an expert at it, and off I went. So that's basically what you're looking at. So in that situation, that's what you're trying to do, is build your skill set, build your money. So now you can pay off the debt. So the individual's problem is, so they make money. I don't know, you make your 2,000, you spend 1,500, make 500. So okay, so you're just living because you have two choices. You cut your expenses, which you got to eat, you got to pay rent, you got to pay utilities, or you increase your 2,000. You make more salary. And believe me, if you're at the grocery store putting up pop and air like I used to do, you ain't making more money there. You either have to be really good at playing poker and betting football, which I was, or you need to develop a skill set. So I'm a little pisher. I'm 16. I'm working at the grocery store, which pissed me off because I could have made the golf team or the baseball team, which I couldn't do because I had to work. When I get to college, I'm working at the grocery store. And again, I can't go out for the golf team or baseball team because they travel. So that pissed me off a little bit. But I get a degree, and then I start going to work in accounting and finance jobs, and that increases my salary. Now I can do things different. Then I go get a master's degree, which I had the company pay for. So the company I'm working at is paid for school. So I go get a master's on them. So they just paid for my master's. I think I paid $1,000. This is in the 90s. And I get my master's, and now my skill set's even higher. Oh, you got a master's. You get paid more than the guy with the bachelor's. Now, I didn't do anything. I just went and got my bachelor's, which wasn't too bad. But to get the master's, the work paid for it. And then I got that. So I got lucky there. But then I took advantage of it. And then I got my master's. And then, then I learned economics. So as I'm making more money, now let's say I have $4,000 a month, and my bills are $2,000. What do I do with the 2,000? Now, this is the mistake that everybody makes. They don't know what to do with the 2,000. Maybe they spend another 1,000. Maybe I'm going to buy the coat. I'm going to take the trip. I got money. I'll spend it. This is what happens, right? So people don't know what to do. First of all, they don't know that they shouldn't spend more than their paycheck. Secondly, if you are lucky to make more than you spend, what do I do with the money? Now, the filthy rich, the LeBron James, it's nothing, right? I make $1 million and my expenses are, Now, what happens is you tend to get higher expenses because you go, oh, I'm making all this money. I'm going to buy this nice house and I'm going to buy this nice car. You're going to spend more. That's how the economy should work. The taxes should be on sales tax. Then when LeBron James buys a Ferrari, it's $400,000 car. He pays taxes on the $400,000. That's what should happen, not this income tax bullshit. That's a penalty for working, and you should never get penalized for working. That's ridiculous. So anyway, so you do spend more. The more you make, you buy a nicer car, you maybe buy a nicer house, you buy nicer clothes. I'll bet I'll get a leather coat because you have more money to spend. So, okay, so there's the spend side of it, and then there's the save side of it. So what do you do? So let's talk save side. So I spend my money, I pay my rent, I eat my food, utilities, I heat the house, take care of the kids, whatever there's the normal expenses, the fixed expenses, rent. Well, I'm calling food fixed, right? I know I got to eat. It's a matter of what I eat. So you have your normal expenses. Then you have your debt, your car payment, your mortgage, your car insurance, things like that, and credit card payments. So that's what you try to get out of expense. That's the first thing. So if you were to go to a financial planner, because people are doing that, just for you, Bobby, if you're out there, avocado. Well, it's almost one. So what are you doing? So why do you go to a financial planner? Well, you got this extra money that you haven't spent after paying all your necessities. We'll call them needs and wants. So you paid your needs, your rent, your food, clothing, utilities. You need a new coat. You need new shoes. Go to the doctor. Go to the dentist. All that stuff is needs. So you make $4,000. You pay $2,000 in needs. That leaves you to $2,000. Here's where everybody gets fucked over. Nobody knows what to do with the $2,000. They just do what they think they're supposed to do, but they don't understand it. That's why I'm here. That's why this class is being taught. So what do you do with it? You hear me talk about gold and silver. You hear me get out of the stock market. That's all the wants is what I'm talking about. So you have money you've got this extra money. Do you save it or spend it, right? Do you take a vacation and spend the extra $2,000, or do you save the extra $2,000? And saving is to be consumed later. So you're saying, well, I'll save it. I want to invest it. Now, most people, what do? They go to a financial planner. They don't know. They're not trained in it. I mean, how many people even if you did take finance, they're teaching Keynesian finance, which is bullshit. It doesn't work, and it's socialist, basically. Tell you how it is. FDR brought in Keynes in the 30s to run it, and look what he did. He created this depression of spending the money and all this bullshit. He believes you shouldn't save and you should spend. That's Keynes. That's what's wrong with it. Austrians believe in saving to invest and consume later, because you want to get what you're getting paid for. So with that thought process, where do I put my money? So I got $2,000. What do I do with it? Well, do I put it in stocks? Do I put it in bonds? Do I buy gold and silver? Do I go buy a Mickey Mantle card? What do I do with my extra money? Well, what's your point? What is your game plan? Well, I want to make more money so I don't have to work till I'm 100 years old, or I want to save for vacation, or I want an investment that'll make me money. That's normally what it is, right? Why do you buy stocks? Because you buy Microsoft at 100, hoping it goes to 150, and you've made money on your investment. That's why most people do it. It's not, but how many options are there? You can buy a stock, Microsoft or Coca-Cola. You can buy a stock for the dividend. So Coca-Cola will give you 3%. So you're buying it, and you know you're going to make 3% every quarter, and that'll be your income. And hopefully the stock goes up. Or you can buy Microsoft or Amazon or one of these where you want to make the stock to go up so you make money. Okay, you can buy bonds, but that's you're not going to make any money on it, and now you're losing your ass on it. You can buy collectibles. You can buy a painting. You can buy diamonds. You can buy Mickey Mantle and Tom Brady, or you can buy gold and silver. Well, what they've done is they've killed gold and silver on purpose with the derivative paper that I've been talking about that isn't the real supply-demand price. So if you're at my level, you understand this and go, well, fuck, this is not where it should be. I'm going to buy it because this investment's going to make me a lot of money. So before you would buy stocks, so you go to your financial planner, he says, well, you got $20,000. Okay, we'll put you in this mutual fund because I'm too stupid to pick stocks, and I'm really a salesman, and I really don't know anything. So I'm going to put you in this mutual fund. and you're going to have Microsoft and mobile and Coca-Cola in it, and China and whatever, and you hope you make some percentage, and in the meantime he sneaks out his little cut that you didn't know was there, and so you just are blindly listening to some guy that you don't know, that you have no idea if he's any good, you have no idea if he understands economics, and you give him your money and he gives it, you're in this mutual fund and you hope to gain, I don't know, what are you looking for? 5%, 10% on your money. So this is the extra money that you don't need. So you keep getting your paychecks, you keep getting your $4,000 a month, you keep paying your $2,000 a month out, and then you keep investing the $2,000 in the mutual fund, and or you take a trip, and or whatever, or you buy a new car, or but if you do, then you have less money. So in your mind, you have to figure out what is it you want, and from there you go and you say, well, I want to make, I can't get my skill set any higher, so I want to make more money with the extra money. So you buy stocks, not bonds. You buy stocks. Bonds are safety. Gold and silver are normally not, they're more safety than they are investment, from the standpoint of, I'm going to make a lot of money on gold and silver. It's money. So you're really not it's not investing. People got into Bitcoin because they thought that was an investment. Well, instead of buying Microsoft, I'll buy Bitcoin and that'll go up. Why will it go up? Well, I don't know, but it went up. Do you know why Bitcoin's there? No, I don't know anything about it, but I know I can make money at it. Why can you make money at it? And this gets back to my analyzing technique of what everybody needs to understand and learn. You have to ask the questions why, and they have to give you an answer. So if you're trying to sell me Bitcoin, I'm going, why will it go up? And I better get an answer. Well, there's only 21 million. Well, it doesn't raise the price. Nobody can give you an answer because there isn't one. It's not money. It's not gold. Why do they call it gold? If gold's such a bad investment or bad thing, why do they call Bitcoin digital gold? So gold must be a pretty good thing if they're calling Bitcoin digital gold. The problem with Bitcoin is it's not anything. It's not an asset, and it's not money. I guess it's a collectible, like a mantle card, where they think, well, look at the value and it'll go up because, and everybody will get into it because nobody wants to be in money. Well, if that's your answer, then you should be in gold and silver, not Bitcoin, because Bitcoin. So if we follow this to the conclusion, if the US dollar goes to nothing, boom, it's gone. Bitcoin cannot hold up on its own, right? Bitcoin has a value in US dollar of what, 18, 19,000. So there is no value Bitcoin brings to the table. This I can bring to the table and I'm going to get paid for it. And if there's no US dollars, I'm going to get paid in gold, whatever gold's value is. As I said, my ounce of gold's 1,800 now. Once this goes to zero, it'll be, as I've stated, it's 150,000 in Pakistan. I'm going to walk in and buy a house with an ounce of gold. Even though there won't be money or US dollars to trade it for, I can give you the gold. You're going to take it, and now I own your house. And it's as simple as that. So I don't need the US dollar for this to have value. It's what will this buy? Right now, you exchange it for dollars, but you don't need to. You can, as I said, I walked into the restaurant with the silver coin and paid for my dinner, and not a problem. The guy took it in 5 seconds. Could I do it with a Bitcoin? No, because he's got to accept it. Is it even acceptable? Rule number 4, it must be acceptable. I don't accept it. If the work tried to pay you, would you accept it? I don't want it. I don't know what the value is. I'm going to pay you $1,000 a week. I'm going to give you $1,000 in Bitcoin or $1,000 in gold. I'll take the gold, but first of all, I don't have a Bitcoin account. Secondly, I don't know that the Bitcoin's worth 1,000. I know gold's worth a hell of a lot more than 1,800 because it's being pushed down, and I know the demand, and I know it's real money, and I know all the properties. So depending on what's happening in the world, if there's no inflation, and there wouldn't be with gold, you take your extra 2,000 and you could buy, Microsoft or Coca-Cola. Coca-Cola will give you some dividends. again, but the financial planner doesn't know anything. So we get back to the financial planner, and you're trusting somebody with your hard-earned money that doesn't know what the hell we're talking about or know what to do. All they do is put it in a mutual. You go to a financial planner, or if you've been to one, give me your story. And I guarantee you, because I did that when I first graduated with my master's and I understood this shit. And I went to a stockbroker and I had, I don't know, 10, 20 grand. And I said, well, what are you going to do for me? Well, I'll put you in Pepsi or something. I said, I don't want a lot of risk. And I says, well, why is that going to go up? And he takes a chart out and he draws with the ruler and he says, look, it's going to just do this. Why? Well, that's what it does. I got up and walked out. This guy doesn't have a clue what he's doing, nor does he care about me. So it ends up where I can't trust him, right? So it's a trust issue. This guy doesn't care about me. He's not going to make me money. He's going to make his own commission off of me, but he doesn't care. He's not going to tell me to sell. When all the shit's hitting the fan right now, is anybody being told to sell their stocks? No. They're being told to hold on, buy more on the dip. Do they understand what inflation is? No. So how do they get you out of this shit? So here you've gotten your extra 2,000. So in a year you got times 12, 24,000. Let's make it 25,000. You got 25,000 extra that's sitting there. And you've got it in a mutual fund because this financial planner guy told you. Is he protecting you? No, he's okay. You'll make money. It's an aggressive fund. Look at the history. It's made money, but he can't tell you why. And he can't tell you why to sell it or why to buy it. Only look, this is what it's done. So therefore it'll keep doing it. He doesn't understand. Well, wait a minute. Jamar Chase got injured. You can't bet Cincinnati and look at their trend the way you could if he's there. Well, this trend's with no inflation. Now there's inflation. You can't look at that trend anymore. You've got to understand what inflation is and how it's going to affect it. This is what nobody's going to tell you. This is because they don't understand it. I understand it. You're lucky. But most people do not understand what it is, how to get out of it, how to save yourself. And that's what I've been teaching for the last year on really how to save yourself. So normally you'd be in stocks. Normally you wouldn't be in gold because it's price fixed. If it wasn't price fixed, you would be in gold. You should always buy gold because it's safety and it's wealth. So you're in your stock market because this guy told you, who doesn't know shit about financing. He just works at Merrill Lynch or wherever the fuck he works at. And you walk in and he goes, oh, it's a customer and I'm going to make a commission because I'm going to put them in a mutual fund that I have no idea anything about. I'm just a sales guy. So all I'm going to do is put you in that. This is why I don't have any financial person but me. I trust me. So when I went to school, I learned the skill of finance and economics and stocks. I learned everything because that was prudent. And then I'm making money off of it. But it's also, I always did the football. Since I was 10 years old, I've been doing the football, and I slowly figured out how to pick it, how to pick the winners, and how to bet it. There's an art to everything about football. It's not just picking the game. It's how do I bet it? And that's what I teach you. It's who do I bet? How's the injuries? Look at the weather. Look at everything. What should I look at to get to the determination of picking a game? Well, you're doing the same thing in the economy, right? What do I look at? How do I avoid it? How do I get in and out? And so nobody teaches you this, right? That's why I'm doing this. So you're in the stock market. The guy's not going to tell you to sell. He gets his little commission every month. So he's sitting there like an idiot. Then you go ahead and you look at that. This is all your extra savings and you're making some money, right? So when I talk to these guys in the hot tub or at the pool or work or wherever, they're all clueless. But since the market's gone up because of the manipulation by the Fed printing money and putting it in the market to keep the market going, not at supply demand level, but at we're printing money. Excuse me. Hello. Good, Taylor. Okay. Okay. I'm gonna come back. I'll be right back. No, 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 not you. I'm on. Uh, let me end it. I'm doing.